Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, July the 27th. The year's 2020. Let's talk trading. Secrets of Scalping 3. It's a Roman numeral 3 for those wondering. Now, just to let you know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Okay, Secrets of Scalping 3. I've been getting feedback, questions, comments regarding the idea of scalping for 1 or 2 pips. And the question usually takes the form of, well, what if you take a 10 pip loss? Now you got to make 10 trades to make up for that. Well, to me, the answer is obvious, but I guess it's not obvious to all. If you're scalping, you don't let price move against you 10 pips if you can avoid it. Now, sometimes you can. I mean, price can spike, and it can spike quickly and hard and fast. And so that might be the best you can do. But if price is just, meandering along and you're down a pip just because you enter the trade in the spread, now you're down 2, now you're down 3, now you're down 4. I mean, what does your trading plan, your exit playbook tell you to do? Because obviously the market's not going your way. So how much room do you want to allow price to move against you? And how many times do I show you this screen? Just about every time I make a video, right? Maybe with the exception on some of the indicator videos. But the point being is, how much are you willing to lose per trade? You see, that's one of the quote unquote secrets, is that you have to manage that. You just can't say, well, it's no good because. No, this is why some traders win and some traders lose. Is because you have a system of scalping, and some traders might bail out after a 3 pip if the price is against them 3 pips or 4 pips. Other traders may wait till 10. And so if you have, say, 3 losses in a row, you could be down 30 pips, right? But if you were only, say, allowing it to go against you 3 pips, you'd be down 9 pips. It's a lot easier to make up 9 than it is 30. In fact, I was on the phone with Walmall today. Shout out to Walmall. And, we were talking about this exact same thing, and that's one of the reasons why I'm making this video. It was on the list anyway, but I think I moved it up. Maybe I was going to do it in part 4 or 5. I don't remember, but I think I should go ahead and answer it today. So just do not let price move against you. In fact, in that one live trade I think I did in the scalping 1 video, I picked up 3.7 pips. And somebody says, well, where would your stop have been? I would say probably around 5 or 10. It just depends on what the market was doing at the time. It could go down to 4 something, and all of a sudden I would see a signal that would tell me to go long, so then I might give it the opportunity. But if I see something that's telling me no, go short, I'm going to bail. And that's the thing about scalping. It's not so methodical. It's more like playing a video game where you're just reacting to what price is doing. So you're reading the chart, interpreting the chart, watching what price is doing, and you're making split second decisions. Either enter the trade or exit the trade, or stay in the trade, or wait for a better opportunity. I mean, remember, you wait, you enter, you wait, you exit. That's the cycle of trading. It just keeps that is the loop. And most of the time you're waiting, because getting in and getting out is just takes a few seconds. It's just that time between the entry And the exit, that wait time, usually is the time when you start to maybe have what I would call the brain failures. Where is that? Moving around here. When this is where the brain management is just as important as the money management, because you might be in a trade. Let's just say you're scalping and it went down against you 4 pips and it comes back and you're at break even. What do you do? What do you do? Do you get out? Do you scratch that trade and say, okay? Or do you anticipate it going up? What do you do? You need to know that ahead of time, but you also need to be able to react. And I was telling Walmart, well, if I'm in a trade for 3 minutes and it's going against me and it comes back and it gives me an opportunity to get out at break even or maybe a pip, yeah, I will jump out. If I've been in a trade for, say, 10 minutes and I've been down maybe 8, 9, maybe even 10 pips, and it comes back and it gets within 1 pip of me being at break even, and it stalls, it quits moving, I get out, because I remember many times where it just seems like the market knows where to bring me really close to my entry, but not give me a chance to get out with even a point, not let alone a pip. So I just go, you know what? Just scratch that trade. I can make up a pip on the next trader. So rather than just sit there stubbornly hold on to that trade only to watch it go from -1 a second time to -2, -3, -4. Because chances are, if I get out with that 0 or -1, then it'll give me a signal probably in the same direction at a cheaper price. And so when it comes back to where I was, I could be making pips, and then it might even bust through that time, because that might be the third hit. And a lot of times price will bust through on the third hit, because the first hit would have been when I got in and it went against me. The second hit would have been when it came back to almost where I was and then reversed again. So this would be the third hit. This is where you might make the money. So how about we just look at the charts and see if there's any opportunities at the moment. Okay, so right now, price is short. Price is coming down off of the high. You can see here on the M1, it looks like it's dropped about, 13 pips in the last 6-7 minutes. So this would have been a very nice trade if we want to do a hairy hindsight, because you had a bull candle followed by a bear candle. It failed to make a higher high and pushed that 3-ball up. And right here, there's this inside bar. So you could have taken this break, hope it breaks there, or you could have waited to take that inside bar break since it's pretty fresh. It's only a few minutes ago. And in either case, you would have been rewarded. In fact, you could have taken this trade, and if you wanted to, you could have piled on here and had a nice trade. So right now, we're getting a turn trade, but H1 is red, H4 is green, so those two signals are missing, and it's a green day. So you can see here, we got this turn trade happening, and it's coming off a 2-ball. So right now, I would look for maybe either a 1-ball to appear and get another short signal, because right now we're in the red rat zone. But let's just go back here and take a look at the chart. Hey, look, all the gaps have filled in less than a day. So anybody trading the weekly gap fill was rewarded. It broke through the previous week's high. Anybody trading that horizontal line is up about 87 pips. You can see once again it broke the previous day's high there, which was also the previous week's high. and we're only 354 pips away from the yearly open right here. Month is up 492 pips. The week and day 102. Now, once again, I think this is the third week in a row where the Monday candle the range has been really huge. That might be something to tuck into the memory banks and go, okay, on a Monday, if it takes a breakout, I'm just going to ride it. Just ride it and see, maybe I can get 80 or 100 pips out of it. Once again, breaking out at a daily high, you can see here we've got about 10 pairs over 100 in range. With the euro pairs kind of leading the way here. Dollar's getting hammered. I think even gold is up over 1900. On the H1, once again, since last night, we still haven't taken out that pivot. Rat traders, right now you're in that red rat zone. We're at the weekly R1 right here, almost hit daily R3. Still going to look to take out the weekly pivot sometime. So we definitely missed the daily, and we missed the daily, and we've missed the weekly. On the wick zones, I distinctly remember saying price wasn't going to stay within here. So you can watch last night's video, and had you taken that trade long here and just went to sleep and woke up in the past hour or two, you would have been rewarded. Of course, remember, these videos are educational purposes only. Your results may differ from mine, and always have your stop loss in place. So back to the scalping chart. You can see here we just had another inside bar break to the downside. And just looking at these M1 lows and highs. So this M1 low hasn't been taken out. There's a gap between the open and the close. I would wager that gap gets filled. I could be wrong, but usually when they even have those little tiny gaps, for some strange reason, price likes to come back and fill them. So the main takeaway from today's video for scalpers is, if you're scalping for a pip or two, you don't take losses for 10 pips or more if you can avoid it. You might not even take a loss of 5 pips. You have to trade the price action. And if it's telling you it's not going your way, just get out. It's so much easier to make up a 3 pip loss than it is a 10 pip loss. I mean, it's just common sense. But I know people like to ask that question, so there's the answer. Maybe you wanted a different answer. I don't know, but that's the answer I give. And as you can see here, we had a H1 red candle right at the line. So that would have been short at 90. Once again, simple trade, call it scalp. You could have, I think that was a 6 right before. So you could pick up, 3 pips or so off of that trade. And if you're, starting out, at a penny a pip or dime a pip, or even $1 a pip, $3 isn't any big deal. But when you graduate, maybe that becomes a $30 trade. Maybe that becomes a, $150 trade. If you're trading, 5 lots, that'd be $50 a pip. And so then maybe if you're up to $50 a pip, maybe 5 pips, 10 pips a day, $250, $500 is more than enough for you to have some pocket money, bill money, whatever. So, fellow traders, just remember, It's not what you trade, it's how you trade it. So go out there and drain the banks. TheRumpledOne signing out.